Morning traders. Evening if you're in Australia. Well, interesting start to the week. I mean, the pound was under pressure on Friday, right? Had some pretty terrible retail sales numbers come out. Bounced back like a champ though. Now this week is actually a big week for the pound, even though it's not really highlighted in many of the reports. I suspect that it's part of the process of the recovery trade is actually getting towards this Article 50 being triggered. Now what we've got is the House of Lords voting on the bill which has already been passed by the UK Parliament. Now that, what could happen here is that we could get a couple of amendments, a couple of little side issues added onto that bill, suggesting that they, have to have final say in Parliament again after they negotiate with the EU. Because next thing after this is negotiating with the EU, and then triggering the 50. Right, this is going to be part of that process. And if we get some, if this moves forward quite quickly in the next 2 days, then I think the pound will enjoy a little bit of support, just broadly, and a little bit of surprise for those who are not expecting it. I suspect that we have some significant topside risk here, and so I'm buying pound yen, buying and selling euro pound. Very familiar trades if you've been watching for the last couple of weeks. Those sort of trades are the ones I've been looking at getting involved in these when the market has had some rally, and we've definitely seen that. So this is just, this is clear to me that it's downside risks until on the signal account, on the streaming account, I haven't really done anything. I just put a little short here, and I missed the entry here on the pound and the pound yen. But if they pull back a little bit, I'll get some of those as well. So those three are the way I'm going to be playing it. I mean, you can avoid the pound if you don't want to play the pound. Short euro pound makes a lot of sense in the current environment. If you believe the pound's going to rally, just broadly. Pound yen is a bit more contingent on this dollar yen, playing catch up with the US stocks, which opened very strong today. But that could come under a little bit of pressure as well, because we're getting very overbought here. 7 out of 8 days up, and running a little bit on thin gas here. It's at some point you have a pullback, right? And it's probably what will happen later in the week and early before next Tuesday, when there's a big Trump speech about his tax plan, is the market might start to take profit, because there's a fair bit of event risk that it will be underwhelming. Okay, now when that profit taking pressure comes through, that usually would come through on the dollar yen, and that would struggle to let it rally. But the US dollar could do in that event, that maybe the pound would do some of that heavy lifting for the dollar yen and the pound yen. So I suspect that that's in the end of the week and early next week that we'll get profit taking in the US stocks as it goes into that major speech, because a lot of this rally is on the back of his corporate tax plan, right? And so he really has to deliver. And there's no reason to go into that so bullish, because he has underperformed in some events, and so there's a fair bit of risk there that's not priced in. Are you talking to Andrew or are you talking to me there, Steve? Pound and US dollar defying fundamentals. In what sense? Which way is US dollar defying fundamentals? US dollar is extremely strong. I mean, broadly, right? From where we were 3 or 4 months ago. I think the market's just priced in a lot more risk lately. Euro's weak. Pound is still extremely weak, right? I mean, it's got to bounce 1,000, 1,500 points just to get back to a weakish level. It's extremely weak here. Oh god, we're not getting into a price versus tech versus fundamental argument for Firesword. Both are important. Both are important. I do believe, though, on a very true sense, charts don't lie, and there's underlying supply and demand going on here. Literally, people are buying and selling. It's not all make believe. But yeah, let's focus on how the pound develops. So don't be surprised if the pound gets above 125. You know, the recovery trade will come in waves, and it's not you know, it's not going to be rational. It's not going to be calm. You know, that's what I would expect. And you know, there'll still be big sell-offs. So you know, say we get to 128 or 130, and then the French finance minister starts fighting with the European, you know, the UK trade minister in a couple of weeks' time, right? That could cause huge sell-offs. It could cause 500-point drops in a week. So there will be definite waves in this, both up and down. But Article 50, Lords passing the bill, EU negotiations, those things are moving towards the end of this crisis, not the start of it. And the argument that we're going to 110 based on a current account deficit that the UK has, I don't think that holds up. Yeah, and while the Bank of England wants a weaker currency, inflation doesn't really warrant that. The inflation doesn't warrant cutting rates any further. Therefore, the next move is probably raising rates. And as the market starts to price that in, that's going to be in the other half of that recovery trade. The sky has definitely not fallen in, although those retail sales were pretty worrying. And if we start to see turn in the numbers, then yeah, we can talk about a mini recession in the UK in the adjustment period. But even then, right, the pound is still extremely undervalued, so it's not like it's safe to sell here on bad news. And you notice that a lot of bad news has not produced sustained selling. And that's another clue that the market is changing direction. So keep that in the back of your minds. Dollar yen, in terms of its relationship with the stock market and the yields, is sort of breaking down, and that's concerning. And I suspect there's background US dollar risk. Although it's not being shown in the stock market, there's some background risk events being priced into the dollar yen. And that's another reason why gold is remaining so strong. You know, you don't usually see gold going up at the same time stock markets are. You're seeing that a fair bit at the moment. So stocks are not a good indicator of what's happening in the market. In terms of the 10-year US yields, which is what we've been watching for a little bit, it dropped back from the 2.5 level. And the market is, you know, that's another sign that there's a bit of risk off going on. That's not being, it's been hidden a little bit in the in the stock market price section. And the reason the euro is underperforming obviously is because those French risks are still gyrating in the background. It's very hard to sustain a rally here. A lot of potential downside still to come. So yeah, we've got a pretty mixed market. It's a bit all over the shop. And you know, the stocks being overbought, then you know you got a little bit of added element here of stocks pulling back, even just technical pullback, creating some more gyration that otherwise wouldn't necessarily be there. In fact, if you're talking about certain moves which are starting to look a bit dubious, it's the Aussie dollar rally. Now this has been supported by commodity prices, and but this commodity price story behind it has been going on for a long time. And the price action rejection above 77 was pretty noticeable. If we start to see a little bit of selling pressure come through here, it could snowball here on the Aussie. And if it comes at the same time as stock markets turn, which haven't done yet, this is just, we're talking about perhaps later in the week, and some of that wage earnings data comes in soft, which is on Wednesday, then you could see another reason, an excuse for the market. Now, if we're sitting here next week and we're above 77, probably going to have to chuck the towel in on any sort of Aussie short ideas, which haven't been really part of my trading at the moment, but it's a lot of people, a lot of my clients are selling Aussie, and mainly because of the price, right? We got back to those key levels near 77.50 from last year, and I mean, it might work out, but it definitely isn't the sort of trade I'm looking for here. There's a little bit more. It is sort of the wrong sort of inflation. I agree that they want wage inflation, they're not getting that. Yeah, I suppose that's the case, Harris. But I think inflation is broadly becoming a bigger theme around the world, right? I mean, it's not like it's a year ago or 2 years ago when there was deflation sort of concerns, and I don't really know what it creates to make lasting inflation. But if they lose control of it, you know, we could see interest rates much higher than anyone expected, and especially, you know, inflation fighting currency banks like the RBA and Bank of England. You know, but yeah, we haven't seen inflation fully come through yet. But US inflation is pretty strong, and Chinese inflation is very strong. So I don't think we're going to have really low inflation this year. Yeah, but perhaps we're not getting the sort of inflation that central banks are too worried about just yet. I mean, let's be clear, the Bank of England inflation numbers were weaker than expected. All right, but they're still coming off lows. They're still grinding higher. So yeah, I think that's just the market's priced out that rate hike this year too quickly. But we'll see. We'll see if it, you know, the recession numbers come through. Like, people are expecting the UK to go into recession, right? That's we've got to see that happen too, or not happen. Don't try and talk me out of being a bull, RS. It's I'm gonna stick with it. So see what trouble I can get into with selling. I mean, my main way of doing it is selling the euro pound, right? That's where I really want to be playing for the next couple of months. I suspect we can test 80 much easier than testing 90. Okay, but I've definitely lost some money on this sort of trade idea before. Too early in the recovery trade, late last year. The market was not ready for a sustained rally when we had that bounce back above 130. So what else is going on in the market? So we've got the Trump speech next Tuesday. Then we've got NFP. Do we have NFP after that? Yes. NFP after that. That's the key March number. So there's a fair bit going on next week. Not so much this week in terms of data. From what I was reading earlier, and we'll have a little look at that in terms of the week ahead. Trump actually took a day off Twitter yesterday, so that was interesting. So yeah, the border tax and corporate tax reform, and any sort of offshore tax as well, that'll be really in focus next week. In terms of this week, it's the wage growth data in Australia, which is that sort of wage inflation data that we're looking for here. Now, if that starts to pick up, then there is a chance here that Aussie continues to outperform. But a lot of banks are talking about the downside risks in this data, and in particular, where is it? It's the Wednesday's report that we'll be watching there. The Aussie Kiwi rally towards that 107 level. It will make or break this week. And for those who are trading the Kiwi, this is probably the most important thing for you to be watching. If the Aussie Kiwi can break 107.50, the chances here of the Kiwi struggling to bounce with the Aussie, regardless of what the Aussie's doing, it becomes much more likely that we do break lower if the Aussie Kiwi goes higher, because so much of the flow comes through on this pair from the Aussie Kiwi side. So whereas if we stall here again and the Aussie turns lower, the Kiwi's probably going to capitalize on that, and start to grind again. I really think it's a dangerous sell on the Kiwi up here. I think the RBNZ was happy with the price action, but they're not going to get too much follow through, as long as there's not too much sort of stock market selling coming at any point. It's been a while since we've seen the relationship here where dollar yen falls, right? Say stock market falls quickly and dollar yen will fall. That will create a little bit of US dollar selling pressure, and you get some pound rally, euro rally, and some Aussie rally. But at a certain point, you know, if selling of stocks get too quick, then the Aussie will be dragged down, and you'll start to see the euro Aussie and the pound, the euro Aussie more than anything, and the Aussie yen rallies being unwound. So that's where that Aussie selling pressure comes through eventually. And so always keep an eye on this euro Aussie. The euro Aussie starts to behave pretty aggressively, and stock markets are falling, then you know, don't expect the Aussie to follow sort of the inverse of the dollar index. It's just, it'll get grabbed down. The Aussie yen rally was pretty significant earlier in the year, and so the chances of unwinding happening in that pair too at some point are pretty strong. There's a fair bit of room there if stocks turn. But it's been a while since the stocks have fallen to that degree, and it takes a certain level of risk aversion that we haven't seen for a while. But if anyone can do it, Trump can. Yeah. Alright, so with this regards to the pound trade, we're looking first to get back above the 125, and then if we can break some of last week's highs, we can start to talk more significantly about 126, 127, and you know, that's what really you want to be doing, that as the news comes out in the next couple of days that the House of Lords are passed. That's really the timing of that sort of trade I want to see. RS makes me want to go look at the UK inflation stuff again. I mean, I thought that it was starting to pick up, and that eventually I didn't look at the internals that much, right? I don't want to get too optimistic about global inflation if there is a reason that it won't come through on UK, so I might have to do some double checking on that, because we do know that the Bank of England will respond, or at least talk about raising rates, and that'll be enough probably to help the recovery rally, which I'm looking for this year at some point. But if we don't see it, or if there's a reason I'm not understanding there in terms of the importing of inflation, because I'm reading much more about the importation of inflation by the lower of the currency, right, and those effects coming through. If there's something I'm missing there, then I will have to re-look at that. Well, let's actually have a look at that now. Deutsche Bank put out a little report on the pressure off the Bank of England. More modest rise in the week's inflation. Yeah, there's 1.8 instead of 1.9, and the wage data was a little bit. Wage inflation was low, a little bit lower than expected. Alright, so this is it. Looking into detail, transport prices continue to provide supportive upwards pressure, and food prices starting to reverse a little bit. So probably, I think we're talking about wage inflation, yeah? We've got to start seeing signs of wage inflation to get the Bank of England worried. But if it does get above the comfort, right, 2.0, if it gets above that, so the PPI, you know, the import prices is really where I think it's going to come from, if it's going to come. Pipeline pressure is showing that. But how weak are the wage for inflation? Broad inflation pressure in the UK is yet to show clear signs of passing through to the wage growth. There will be some comfort to the BOE's current stance. I mean, Bank of England is going to be very reluctant to turn hawkish, right? They will be very reluctant. So we need to see wage inflation before we can you know, start to price in any change there from the Bank of England. Okay. So that, I think that maybe that data will become even more important. Now remember last week we had that really nice beat on the claims change, right? But the wage growth was so weak that the market actually fell, right? Straight away. So these are probably the most important release there with the unemployment numbers. Alright. I'll look more into that after the stream, guys. Alright, and just quickly we'll go over what happened in the positioning last week. So, the week before last. Remember it always 1 week lagged. It wasn't too big a move last week, so. So Kiwi keeps getting demand on dips. Not really too much change in the euro. So pretty muted changes. Nothing there yet that we can get excited about. So leverage funds are the ones which are a little bit dangerous here. See if that changes in it. Alright, just quickly, we'll finish with, if there's no one want me to look at some particular pairs though, then I'll quickly go over the week ahead. Like I said, I expect the Thursday, Friday start to see some pullback in stocks, or at some point pullback in stocks as markets get jittery about Trump's speech. Perhaps we get leaks, perhaps we get some sort of, you know, checking out there, leaks to check sort of how the market responds to certain ideas. Could be really strong actually. I mean, if these leaks come out and they're along the lines of what business really want, then perhaps we do get, you know, extensions there in the stocks. But you know, if people get jitterish, I don't think you can run into highs into a key speech from Trump. I doubt the market remaining super high there. But I've been surprised by the rally so far, so I'm not going to trade that too aggressively, that's for sure. The Greece news in the background, you know, it's hard sometimes to read about Greece and take it seriously anymore. But you know, we really do. It's just, it seems like it's a lot of posturing from the Greece government and the IMF and the Eurozone, and you almost feel like it's 100% they're going to make a deal. If that changes, you'll probably see it come through pretty quickly. But yeah, I don't think it's a tradable risk right now. I think the market's more concerned about European politics than Greece. But obviously it would be positive if they come to an agreement in terms of the money needed. Let's keep a small eye on it, but not really focus like we used to. I'll have a look into the timeline for when they need the money and there needs to be a deal. If the brinkmanship gets a bit more fierce, then you might see the market take a risk off you to it. So the spike higher in the March rate hike chances, you know, above 40% is pulled back 36%. Now, keep an eye on that though. I mean, that's why this next week's NFP is so important, because it will change that percentage chance so much. And so you might see bigger moves than usual at the NFP next Friday. I doubt, and you know, many people doubt that they'll raise rates in March. There's just too much uncertainty given the fiscal policies of the new president, and you know, no need to rock the boat just yet. But you know, we'll see. They should have really made it clear they're going to do that. But perhaps it puts a little bit of a in between meeting on the cards. So put May on instead of June, July. Yeah, there will be some talk about the US minutes. I mean, it is a light week, so perhaps we will read into that further than we would have normally. Given that Yellen just spoke to Congress, though, I think that's the latest, you know, the fullest and latest sort of view that we get from her. And pretty true. I mean, the Eurozone issues are there, but there is no trigger. I think it's actually really hard for Le Pen to become to win this, what they call the second round. So, you know, that could perhaps, when you see that drop out, you say Greece gets their bailout and Le Pen loses it looks like, you know, sure, and the market understands that to lose. You know, the euro might be on a much stronger footing than we currently price it in. Especially if it looks like March is off the table, right? I mean, there is ways the euro has nice bounces this year. Not the big bounce, but definitely you know, 1 to 2 month bounce. Definitely doesn't go against my pound rally, but you know, we'll see. We'll see when the timing of that is. Alright, these guys are on the same sort of trade, short euro pound targeting 76. That's sort of the level, 76, 75, that really I think we can get to by the year at the end. And I will be reading more Barclays to get their view on that, because I want to, I mean, you want to read the guys against you, the guys with you. I think Citibank and Deutsche Bank see it 110. So I have you know, their view is much more fundamental. And Aussie is, there's just no data this week, so they're talking a little bit on in the bigger terms. Alright guys, so yeah, an interesting start to the week. We'll see how it develops Keep an eye on the stock markets if they can maintain their rallies or not, the good optimism. Keep an eye on this pound. That's where it seems most of the action is today. See if we can get above that 125. That'll probably start to fuel anticipation of further gains. If you're a seller of the pound, just be careful here on selling the next rally. I mean, it's been nice selling in the range lately, but I just get this sneaking suspicion this week's going to be very strong for the pound. If it can clear another hurdle. Alright guys, good luck with your trades, trade safe. Hopefully we get a little bit more action tomorrow and we can discuss some things. Other than that, today in the US session is a public holiday, so I forgot to mention that, so you won't see too much action during the US session. So really we're going to be likely coming into tomorrow's update at very familiar levels here. The only thing which seems to be in play is the pound. Good luck guys.